that have any impact on the overall economy?
That has a relatively minor impact on the economy longer term. The fact of the matter is, I think it's upwards of 80% of government operations will be funded even throughout the shutdown. The essential services are open. Of course, all of the entitlement programs are still in place. It certainly speaks to the some of the infighting that we see in Washington between the two parties and even within the parties, but that I don't believe is going to have any serious negative economic consequences for the coming year.
And is that just a factor of how our society is set up, capitalism, freedom, that sort of thing? There's sort of that buffer?
Well, there is that buffer, and the fact that so much of this is on autopilot, and that's certainly something that should be addressed. We need long-term spending changes. I think at some point the market is actually going to start factoring that in when people start realizing that we still have not addressed a long-term structural deficit to the tune of more than $100 trillion if you look at the unfunded liabilities. That has to be addressed because every dollar that is taken to go ahead and fund the government either through taxes or through debt is a dollar that's either not in the pockets of consumers or a dollar that's not available to invest in private enterprise.
Yeah, when you talk about dollars being available, one of the things that people have talked a lot about is Mnuchin's calls to the banks and what that could potentially mean and what effect that's having. Your thoughts on that?
Well, I was surprised, as were others, to see that press release. I believe that was on Sunday night. I saw that right as I was ready for bed before a holiday week.
Now woke you up.
That was a bit of a surprise. Now, the fact is, everything that we see from data suggests the banks are well capitalized. I think that's positive news. I think what was disconcerting is that the announcement went out on a weekend, particularly during a holiday week after we suffered one of the worst stock market routes in recent memory.
You think the idea was to say, hey, don't worry, we have money, and they were trying to find a way to say it, but it had that question where people were wondering if that was what was going on?
The intentions are good, without a doubt. The intentions are good. I just don't know if they had the desired consequence.
What do you think is going to happen on Wednesday when things kick back into action? What are we going to see Wednesday, Thursday, Friday, looking into the rest of this week?
Wait, market prognostication, that's a risky business. However, I will point out, despite the fact that there is some economic uncertainty and we have concerns over trade, if you look at PE ratios, there are definitely some stocks that are beginning to look like bargains at these levels. Of course, we've had the tech sector that's down, I think, roughly 40% across the board. The small cap index, Russell 2000, is down 27%. But if you look at the trailing PE ratio, we're at about 18 now. And that is the lowest PE ratio heading into a new year that we've seen since 2014. So there may be some bargains to be had.
Well, as you mentioned that, I want to go back to something the president said today. He really crowed about confidence in our companies. I mean, is that where we have some stability?
Well, I think that longer term there's going to be more stability than we've had. The tax cuts, the fact that it was an actual tax cut, that's a positive, but the fact that this was structural tax reform, that's an even bigger positive. And we begin to see some of that confidence just in the fact that companies are bringing home some of their overseas earnings. I think that's going to build into the coming years. I think there's a confidence that the current administration is putting a pause on some negative regulations. They're taking a more cautious approach to that, and that this is a more business-friendly environment. And I think that will be a net positive in the coming year.
As you brought it up, the tax reform. So we're about a year out from that, and initially it seemed to have an impact. Here we are a year out. Your thoughts?
Well, we have to look at the tax reform. There are two major components here. We had the shorter-term impact. We saw the rush of consumer spending. That was expected. The typical person saw, depending on your income bracket, between a 1% and 4% increase in after-tax pay. That's wonderful. People keeping more of their own money. But the far more important part of this tax package are the incentives it puts in place for businesses to invest and investors to provide those funds. That's going to be a longer-term economic gain. It's not going to be to the tune of 2% and 3% and 4% extra growth each year. The long-term estimates are that it's an extra 0.3 to 0.5% long-term above baseline. But that's a very positive impact, and that snowballs over the years. And I think that businesses have just a lot more confidence going forward in the permanency of that structure.
Well, we are certainly hoping for all good things in 2019. So thank you so much, Joel, for joining us today.
Thank you for having me.
We appreciate it. Thanks.
Speaking of businesses, check this one.